The next section on the data entry sheet is used to specify all of the sales information, property values, miscellaneous income, and sales cost, and is mandatory for all projects. In the first part we need to specify the estimated sale price, or the end value of all of the properties in our project. Because our project involves the sale of a renovated property, the sale of a single block of land, and the sale of 2 constructed dwellings, we need to specify those values, and as you'll see from the example on your screen, this is exactly what we have done. If the number of titles in the completed project is 6 or less, then a separate value can be entered for each title. However, if the number of titles exceeds 6, then a new field will become visible that allows us to enter the number of properties that we have, at the value we have entered. I will demonstrate in this example where we currently have 4 titles by returning to the top and changing the number of titles to 8. Then clicking on the link to return to the sales section, you will see the new line that I described. When I change the numbers to total 8 properties, the error will disappear. The number of sales or property values specified here has to agree with the number of titles that we specified in the property information section at the top of the data entry sheet. You will notice that the system will also insert the projected month of sale for all properties, and this information is gathered from the project timeline plan. If we wanted to vary that month of sale, we could do so just by adding a change in the month of sale below. When we make an alteration of that type, the program will automatically calculate any variation in interest cost, and any variation in cash flow. To demonstrate this more fully, I have switched on the watch window which we described in an earlier section. On the watch window you will notice that this project is likely to deliver a profit of $225,000. When I modify the month of sale now to 18, you will immediately see that the profit changes to $223,000 as a result of taking into consideration any variation in cash flow or in interest calculations. As you might remember at the beginning of the data entry sheet, I entered values for income and expenses in relation to hold properties. So what I can do now, rather than change that month to 18, I can simply type in the word, hold, on the assumption that we want to hold this particular property for cash flow or growth. You will see immediately that this changes the watch window to indicate an anticipated loss, in this case of $204,000, but the outcome in holding this particular property will give us a cash flow positive result of $364 a week, pre-tax. In the same section of the data entry sheet where I specified the rental income and the operating expenses for hold properties, I also indicated that these values should be multiplied by the number of properties we hold. So if I wanted to hold the 2 new dwellings, I simply type in hold and all those values for renting and expenses will be doubled, and as you see now, in this scenario, we have an anticipated loss of $625,000 but with a positive cash flow of $506. As each one of these scenarios is tested, the program automatically calculates any changes in interest costs, cash flow, GST liability and GST input credits to give you a result which is absolutely consistent with the type of scenarios that you might normally look at in a project. In the second part there is provision for adding income that comes from other sources, such as government grants and government incentive schemes. The program treats all of this income as a one-off income event that occurs at the end of the project. In the last part, on the left-hand side of the screen, we have a simple checklist for the sale costs. Starting with the agent's commission, which can be specified as a percentage. All of the other items are just merely a simple checklist which can be changed if you need to, and obviously, the amounts can be modified to reflect the types of expenses that are going to happen at settlement. On the right-hand side of the screen we have a GST summary. This just summarizes the liability on our sales and all of the input credits that we have received during the project. All of these items are then totaled to give us a total sales cost on the project. This concludes the sales information section.